All right, so we are starting the meeting from here. Today, we want to learn a bit about market structure. It is something that I have already done with you. But like I said, we want to remind ourselves. Then, after that, we will add something to it. Okay. All right. So, when we talk about the market structure, basically, or in a layman language, we are simply talking about the trend or the direction of the market. Okay, the trend or the direction of the market. So if you understand the basic principle of trading, it is what buying and selling of financial assets. That's the basic definition of trading. So what do you call it? Even the traditional trading that we know, I mean, the trading that we do in our traditional markets. Let's say you sell vegetables or you sell electrical appliances or something like that. You, as the seller, what do? You buy them from a vendor at wholesale prices. Most of the time, the wholesale prices are at lower prices. Then you put something on it and then you later sell it to customers. And then the difference between the price that you bought from the vendors and then the price that you sold it at, that becomes what your profit. So basically, if you will benefit from the markets, it is when you buy at a lower rate or a lower price, and then you later sell it at a higher price. That is the only time that you make money or you make profit. So bring that idea here. We are going to use it. So all these things that we are learning, they are not abstract. These are things around us. Like I did in the introductory lesson, I told you that Forex, it stands for foreign exchange, and it is just the swapping or exchanging of currencies. So you change one currency to another. So as if you have Gambia Delasi, and then you want dollars, what you're going to do is that you are going to sell your Gambian Dalasi and then you buy the dollars. That's basically what you are doing. Okay, so we are exchanging one currency for another. So all the instruments that we trade here, they are real. They are real. Okay. So the chart that I have on my screen is Euro USD. Like you can see from here, if you can see my cursor, there is EUR USD. That is the European euro against the United States dollar. So these are two different currencies that are paired against each other. Okay. So at the end of the day, their strength is measured in terms of candles, which appears in the form of what? A structure, like you can see here, or patterns. So at some point, the price is going down. At another point, it is going up. So you as a trader, you're only taking advantage of what? The fluctuation between the prices. Okay, the up and down movement of the prices. That is what you're taking advantage of. So if any case you are going to make money, then you need to understand the fluctuations. You need to understand the directions. You need to understand where the market is going next so you can decide. Okay. So I've already explained how you make money from buying. You buy at a lower rate and then you sell at a higher rate. However, in trading, it's not only buying that we do, we can sell as well. So I can decide to sell Euro USD depending on the analysis that I have done. What is the intuition behind that? So let's say you own an iPhone and then your iPhone, you bought it at 10,000 Gambian Delasi. Okay, that is how much you bought it at. And then you get some hints, maybe some economic news or any event. Okay, or an Apple came out and then they said that in the next subsequent months or weeks, they are going to release a new version of an iPhone. If you have noticed, anytime that there is a new version, the old versions, their prices reduce. Okay. So let's say you own an iPhone that costs you 10,000 Gambia dollars, but you know that when they release the new versions, your own is going to drop in value. So maybe it will drop to 8,000 dollars. What are you going to do about it? As a trading expert, you take advantage of this news. Go to the markets as at the time that you hear the news and sell your phone at 10,000 dollars. Then you wait for the new version to come out. When it comes out and then your version drops in value to say 8,000, go back to the market and buy your phone back at 8,000. Now you sold it at 10,000. You have your phone and then you have extra $2,000. So it means that from just that transfer, you've already made $2,000. So that is how we sell in the markets. Okay. When we realize that a particular instrument, a particular currency is going to drop in value over time, we sell that particular instrument. And then when it goes down, we go back and then we buy it. So the difference between the prices becomes our profit. I want to believe this is clear. If it is not, put the question in the chat box. When I'm done with the teaching, I'll get to it and then I'll address all of it. Okay. Thank you. So now we can start the technical stuff. So we should be able to tell the trend of the market. So take this from me. These are the three main things that you do as a trader. Anytime that you open the chart, you should be able to, one, tell the trend of the market, tell the trend of the market, or some people refer to it as market structure. I should be able to tell the structure of the market. Then two, you should mark appropriate levels. Okay. I did this with you. I taught you support and resistance. I don't know if you remember. These are what we are talking about. Then the third one is that you wait for entry signal. Okay. These are the only three steps. Let me put it that way. These are the three steps that you take, you follow anytime that you open the chart or anytime that you want to trade. These are the three things that you have to follow. If you follow this, okay, you have already won your trade by, say, 60 to 70%. The rest is your risk management and then your emotions, your trading psychology. Okay. All right. So it means that if we are able to do the technicals well, then we are halfway through. And then the technicals, it starts with or telling the trend of the market, whether the market is going up or it is going down. And we learned from our second meeting that when the market is going up, it forms series of higher highs and higher lows. When the market is going up, we learned that it forms series of higher highs and higher lows. I want to believe that we remember this. We did this somewhere in December. It's been a long time, but I want to believe we get it because I shared the video, so I'm sure that you had access to that. So an uptrending market is characterized by a series of higher highs and higher lows. So we see the market going up, coming down, going up, coming down. That's how it moves. All right. Then we have the other way around, which is the downtrending market. And what happens? It goes down, then it goes up, then it goes down, then it goes up, then it goes down, then it goes up, then it goes down, and it goes up like that. That's how a downtrending market moves. And then we say that it is also characterized by a series of lower lows and then lower highs, right? Series of lower lows and lower highs. Okay, so we have not done any assignments yet. We have not practiced anything yet. But after this, I want you to practice, and then I'll give you assignment as well. So by Monday, make sure that you have submitted your assignment so we see that we are all on the same page. Because like I said, from Monday, we are going to drop a lot of signals on the platform because we are starting active trading from Monday. If you can join us, just fund your account and follow the setups. Okay. That is why it is important you understand the lessons that we are taking. Okay. Very well. So we have other structures of the market, like the ranging market and the choppy market. But for now, I'm not going to talk about the two. We are going to focus on only the uptrending and the downtrending because that's what we will be trading. Okay. That's what we will be trading. Then later, when we become experienced, we will look at the other markets as well. I want to believe this is okay. Right. So now our ability is to tell the trend of what the market. Please, from here, I'm going to quiz you. I'm going to put any random chart on the screen, then I'll ask you the trend of that market. Tell me what you think the trend is. No one is wrong or right here. You are just sharing your idea. We are not going to beat you. This is not primary school. Nobody's going to do anything to you. So please feel free to what? Share your idea. I hope that's fine. All right. So I'll put any random chart on the screen. Then you tell me the trend of that market in your own understanding. All right. In order not to confuse you, I will look for clearer market structures and then I will ask for your opinion. So pay attention to what I'm going to do. I'm not going to focus on the entire chart. I'll just shade a part of it and ask you to tell me the trend of that part. So look from here, my cursor, look from here all the way to this level. So I mean that um, okay, pardon me, can you hear me? So sorry about that. I had to attend to a call. Right. Um, can you see my screen? Please let me confirm that if my network is still intact. Are you there? Please, can you see my screen? Okay, thank you so much. Right, so let's go there. So I mean this part. Okay, this part of the screen. And I clear it. Right, good. So I mean this portion of the screen. Please remember this side is not part. I'm only referring to this side. What do you think is the trend of the market here in this space? What is the trend? For this, I want you to put it in the chat box, please. Put it in the chat box. I want to see your view. What is the trend of this market? Kindly tell me that. What's the trend? In the chat box, what's the trend? Okay, okay, so let's continue. I have two people sharing. I don't know how to use the Google thing. Oh, sorry about that. Blessing. Um, okay. So I hope your problem is sorted. Yes, okay, okay. So I believe that we can assist her with that. All right. I have three people sharing their view. They are all confirming it is a downtrend. That's a sell market. Is there anyone with a different view? If you have a different view, let me know. You just explain it to us. That's all. We have eight people plus myself in the meeting. I only have three options. The rest of us, let us hear from you. What do you think the trend is? Okay. So I have four people confirming that it is a downtrending market, and I agree with them. I agree with them. Without doing any technical thing here, I can see that the market is descending, right? It is descending. It went to this level and then it came all the way down here. Now, a technical way to do this is to mark the levels. So remember, I'll take you back to what I did here. I said that tell the trend of the market. After you've been able to tell the trend, mark what appropriate levels. The levels are very important because those are the entry, your entry confirmations. Okay, so they are very important. So I will come back here, and because I've said this is a downtrend, I'm going to locate lower lows and I'm going to mark them as such. So I will mark this. If you don't know how to mark this, please visit the old videos that we did. We have treated this before. We have looked at marking the levels, the support and resistance levels. I believe that you remember. Yes, I taught you that, so I remember I have done that. So just mark the levels, okay? Just mark them. Just mark them. Mm. Just mark them. Very, very simple to do. If you practice this, you should be very good at it, okay? So what was I doing? I could see that price will go up at some point and then it will go down, goes up at some point, then it will go down, go up, go down like that. So the resting point where it gets to before it goes up, okay, because in the downtrend, that's our emphasis. Where it drops to before it goes up, that becomes our resting zone, and that is the lower lows. So we are interested in marking the lower lows. So here we mark the lower lows. I like to use the test so that when you are learning, you will get what we were trying to do. So we mark lower lows. Okay, that's the LL. That's what we've done. We mark lower lows. Okay, that's what we've done here. So, how do we enter a sell market? After you've been able to tell the trend of the market, and then you mark the levels like this. As a trader, this is what you do. When you mark the level, wait for the market to break it. Okay. By breaking it, we mean wait for the market to go through it. When it does, wait again for the market to come back to it. So when it comes back to the level that you marked, that is when you enter a sell. Okay. That is when you enter a sell. So according to the explanation I've just given, on the 4 hour time frame, and then the volatility index 25, over here, there was no entry because it didn't get to the line, right? This one too didn't get to the line. This didn't also get there. Okay, so we see that it didn't get there. But when we got here, this one tapped it. So we would have gotten a sell from here. When we got here, it also got to the entry. So we would have gotten an entry from here. And then the last one, this one also gave us an entry from here. So we missed like 4 or 5 entries, but then we ended up having um 3 of them. We ended up having 3 entries. It is important that you learn to wait for a clearer entry than to rush and enter the trade and lose your money. Okay. So if we had waited, at least we would have made something significant from this. As a matter of fact, there are other ways that we could use to enter the trade and still make money. Okay. Which is something that we'll look at later. Please, is this okay before I continue? Is this one okay? Let me know. Is it okay? Is the explanation okay? If it is not, you are the reason why I'm here. Let me know. So I'll take you through it again. Don't keep mute because everyone else is saying they understand. If you don't understand, let me know, please. Because after this one, I'll give you assignments. Okay. Please kindly mute your microphone for us. Kindly mute your microphones for us. Okay. Okay. No problem. Who just joined? Your microphone is disturbing. What's the name? Yeah, Jalo, your microphone is disturbing. I don't think you're paying attention. Okay, thank you. Okay, thank you for doing that. Okay, so have 2 people saying that I should go over it. For um, where is the chat? All right, so is it Bubakar? I understand. And let's see if it is correct. I understand because you missed the first lessons. So I get you. I'll go by it, but then I will entreat you to revisit those lessons because they were recorded and the links are on the platform. If you don't have them, just send me a message after here and I will give you access to them. Okay. Go by it and then you should understand. For Kadi, I don't know whether you made it to the beginning of the lessons. Anyway, I will still go over it because I want us to understand. All right. So what I'm doing here is what we call technical analysis. Now, the technical analysis, you start from telling the trend of the markets. And by telling the trend of the market, we mean that whether the market is going down or going up. Okay. And then we are using the right side of the screen as a case study. And per what I have done on the screen now, or what we can see from this side, we can see that the market was dropping. How do you really tell that the market is dropping? I think maybe that is your problem. So look here, follow my cursor. Okay, follow my cursor. Over here are the prices. Okay, the market prices. What we have here, if you can see my cursor, these are the market prices. So if I'm going to put my cursor somewhere and then I'm going to pronounce the price there. I will speak it out loud. So when I put it here, the price is 2,773.99. 2,773.99. So that was the price when the market was around that level. Okay, up there where my cursor is. If I should move my cursor all the way to, let's say, somewhere here, the reading there is 2,461.10. 2,461.10. If we compare the two numbers, we can see that there has been a decline because the other one was 2,700 and something. And this is what 2,400. So we can see there has been what a decline, which is a depreciation in value. It means that the market is in a downtrend or it is selling. That is what it means. Okay, so that's the layman way of telling that the market is declining. It means the price is going down. So just like I said, I'm sure that most of you are familiar with iPhones, right? You can do your research and then you realize that let's use the iPhone 11 for a case study. The iPhone 11, the price around 2020 was higher compared to now because that time it was fresh and it was new in the system. But over the years, it has been declining. So it means that the market for iPhone 11 is in a downtrend. It will continue to go down until it becomes valueless. People will not buy again. A typical example is Nokia 3310. Who is buying Nokia 3310 now? But when it came, it was what? A top-notch product. And people were buying it as what? A higher price. And then it kept on declining until it got to a point nobody wanted it. So nobody bought it again. It means it has lost its value. That is what it. So that is how we mean when we say the market is in a downtrend. It keeps on declining. It keeps on declining. Okay. So because we can see a decrease in price value from here all the way to the bottom, that's why we say this is what a downtrend. But a technical way of defining this is by identifying the appropriate levels. And those appropriate levels are what we call the lower lows in this case. So your task is to find the lower low and then mark it. Find the lower low and mark it. Find the lower low and mark it. Then these are what we call resistance levels. The levels that you mark, they are called resistance levels. So anytime that the market goes back to the resistance, you sell. That is it. Anytime that the market goes back to the resistance, you sell. So I'm saying that after marking the levels, just wait for market to break it. And if it goes back to it, then you sell. After marking the level, wait for it to break it. If it goes back to it, you sell. So here we can see clearly that it didn't get there. It tried going back to it, but it didn't get there, and then it sold. Yes, the same thing here. So we would have missed all these chances until we got here. Over here, it broke it, and then it went back and it sold. That's a win for us. Went back to it, it sold. That's another win. Went back and then it sold. That's the third wind. Okay. And then I was saying that it's good we take our time and then we wait for the market to be ready before we enter than to rush and enter and then lose our money. That's what I was trying to say. Okay, so if after this explanation you still don't get it, then I believe that you have to visit the first two videos because that one I took my time to handle um what do you call it, the market structure and then the levels marking. I talked about that. Here we are adding something to it. And because of that, if you don't know what we have done in the past, it will become a problem. Okay. All right. So that will be my advice. If you still don't get it, please revisit the old videos and then you'll be good to go. I hope we are all on the same page. Okay. All right. So over there. Yes, I have recorded the video, so I'll share with you right after. Okay. So now we are done with this part of the chat. I am going to delete everything here and then we will look at this aspect of the chart here, this aspect of the chart. So it means we are going to forget about this. I want you to forget about this. Forget about this side. Or if you look at this side, you'll be confused. I want us to consider this. So what is the trend of this market? What is here? What is the trend of the market? Fast fingers. Let's type. Let's put it in the chat box. What is the trend of the market so that we can start analyzing it? What's the trend? Okay, so Cardi is saying it's an uptrend. Who else agree with her or um, disagrees? Let me hear from you, please. Only one person has shared their view. What's the trend? Yes, it was going up. Yeah, I like that Bubakar is able to also identify the trend. That is fine. Some people will not be active because of bad network. No problem. That's why we are recording the session. Okay. Blessing is also saying it's an uptrend. I hope that we know what we are saying. We are not just copying others. I hope we know that. I'll be very glad if we know the trend. That is brilliant. Okay. So why are people telling me it is an uptrend? Yeah, we had 11 people. Where have they gone to? Oh, Musa, let me show you again. This is the trend. I want us to tell the trend of this part of the chart. We have forgotten about this side. This part of the chart. This. We are using it for the case study. All right, so if you can see it, that's bullish. Excellent. Yeah, so I can see that Musa is very experienced, like an experienced trader. So that's the technical term. That's a bullish trend, right? Yeah. So obviously, this is an uptrending market. And why is that so? I did something. We can put a line here, and then we'll put another one here, and then we compare the prices. So if we start from here, the price is what? 2,393.84. And then we go up there is 2,754. Look at it. 23932754. Definitely, this is bigger than this. It means that the market has appreciated in value over this period. Okay, which means that it is what an uptrending market in the within this diagram, or it was uptrending over the period, and that's what we call a bullish trend. I hope we are on the same page. Then we learned in our second meeting that when we identify a bullish direction, we are going to look for higher highs, and we use them as what the marking. So I'm going to, because I've already taught you, if I had not taught you, like I'll show you why I'm doing this, but I've taught you this. So I want to believe that you all get it. So all you need to do is to mark it like this. Very, very simple. And it's very clean. If you really understand trading, you will see that what we are showing you is very, very powerful because this would have made you a lot of money. It would have made you a lot of money. Now, for the benefits of Let me do this. Let me delete the lines. I want I want to use this so we don't cross it. All right. I don't want us to cross the other side. Yes. Good. So it is the same thing that we did in the first place, but I'm using a different way of marking the level. I don't want it to cross the bearish market so that we will know where the emphasis is. Yeah, excellent. So I'm talking about this part of the chart. Okay, let me zoom it. It's a bit so excellent. Right. So I'm referring to this part of the chart. Like we rightly said, this is what an uptrend, this is a bullish trend. We locate the higher highs. Remember, that's what we did over here, right? Higher highs when it's going up, right? And it's going down, it's sort of lower lows and then lower highs. Excellent. So we have this. And just like I said, when you mark the level, wait for the market to break it. When it comes back to it, you take a buy. Mark the level, wait for the market to go through it. It comes back to it, you take a buy. Wait for it to break it, come back to it, you take a buy. So if you knew this thing that I've shown you here, then last year in November, you would have made a lot of money from this buy trend. You would have made a lot of money. And this thing that we are showing you, it repeats in the market. It repeats. So that is why you can be sure whenever you see it that the market is going to go up or is going to go down. This is how we do it. Okay. Yes, there is a place where the market will switch direction. How do you identify that? There is a lesson on that. We will get to it. But for now, we are only focusing on what one-sided, when it's an uptrend or a downtrend, because that's what we are going to be treating. Okay. Is this okay? Is this clear enough? Let me hear from you. Do you understand what I have just done? Do you understand it? Musa is saying he understands. Thank you for that. Please, if you don't understand, let me know. There is no problem. I'll take you through it again. Is it Ibrahima? I hope that's correct. Yes, he's also confirming. Is it clear to all of us? I do not understand. Blessing says that she doesn't understand. Blessing, were you here when I was repeating the downtrending part? It's kind of a reverse. Yes, it's just a reverse of that. No problem. Let me take us through it one more time. Okay, so the market does a lot of things, but we are focusing on only two things for now. It's either it goes down or it goes up. And I've explained season when the market is going up. Okay. Yeah. So when you buy a product with the intention that any product of your choice, let's say you buy a land, yeah, let me use a land. I'm sure that land banking is also something that you people consider in Gambia. In Ghana, we consider it. If you want to make money as a youth, if you have it, if you have a starting capital, what you can do is that you can invest in lands. So you buy a plot of land or two plots, maybe up to 10 or something. Keep it. After a year or two, you can sell it two times or three times the price that you bought it for. What this means is that you knew that the price of that land will go up. And so you bought it at a lower price and waited for it to go up so you sell it. So when we buy, that is the same idea. I mean, when we buy in the Forex market, it's the same idea. We are buying at a level that we believe that that is the lowest we can get on the market. And we wait until it goes up, then we sell it. And the difference becomes our profit. Okay, so land banking is a typical example. You have the intention to buy a land, but then you have the idea that within the next 2 years, the price of that land is not going to be the same. It's going to be maybe times two or times three. So you buy it, when it finally appreciates, you sell it. So we are using the same idea here. Now, when the market is in an uptrend, it's telling you that that is the lowest you can get the price. So it's best you buy it that time because it will go up. And yes, of course, we can verify it. When it formed this higher high, the price was what? What was the price when it formed this higher high? It was 2,459.59. So you knew it was going to go up. So you bought it around this time, this price, and you wait for it to go up to maybe here, which is 2,704. There's a huge difference. And that difference can give you a whole lot of money. So you know this it is going to go up, you buy it. When it finally goes up, you sell it. When you reverse it, it's the same for what a sell market. You know it is going to go down. So what you do is you will sell it at that higher price. When it finally goes down, then you buy it back. So the difference becomes your profit. This is the technical way of what looking at buying and selling. Okay, that is the whole idea. All right. But when we come to the market, we represent them by higher highs and higher lows. And then we say that when the market is in an uptrend, this is how it moves. It goes up and it goes down. That up movement, where it ended before it got down, that is the higher high. And that is where we put our support line. Okay. So I mean that this here is a higher high and I place a support line there. This here is a higher high. I put a support line there. This is a higher high. I put a support line. Higher high. I put a support line. So let me write it. This is what? Uptrend. And what do? We mark support levels or we mark higher highs. Okay. That's basically what we do. Well, that's what we do. And then I'm saying that after marking, you want to learn how you actually enter the trade. So we are saying that wait for the market to break your level. When it comes back to it, you take a buy. Wait for it to break the level. When it comes back to it, you take a buy. Wait for it to break your level. When it comes back to it, you take a buy. So this is how you are going to do the buy and sell. Now, what I have shown you so far is past data. This is something that has already happened in the past. It has already happened. This one happened somewhere November last year. This happened November last year. So with that idea, we want to analyze a live market. We want to look at a market that is trending at the moment, right now, and we see how we are going to analyze it and see how we are going to trade it as such. Okay. So this is my advice to Blessing. If you still don't get it, it means that it's either you missed the first 2 or 3 lessons, or you didn't understand and then you didn't ask questions at that time. So you have to go back to those lessons and then understand how we identify the structure, how we mark the levels. Then you can add this to it. Of course, that is true. In fact, let me put it this way. If the market is always going to respect the levels, then it means that the market will be in one trend forever. That's what it means. If the market is always going to respect your level, then the market will either be in an uptrend forever or it will be in a downtrend forever. The market at some point will have to switch direction, either from an uptrend to a downtrend or a downtrend to an uptrend. That happens, and we will learn how to identify when the market is going to switch. Okay, we will learn how to identify that. Another thing is that sometimes the market will eventually go in your direction, but it will go against you for a while before it will eventually go in your direction. And that is why it is important you learn how to set stop loss correctly. How to set stop loss correctly. So you don't put your stop loss anyhow, anywhere you want it. You don't do that. You do proper analysis and you know where to place it. It is part of the lessons that we will study in the future. We will talk about all of that. Yes, so that is the explanation behind that. If the market is always going to respect our levels, then one, either the market will continue in one direction forever, which is never possible because of demand and supply. At some point, it has to sell. At some point, it has to buy. Okay. Or it can go against you for a while, but eventually go in your direction. And most of the time, when that happens, it either means you did the wrong analysis or there was an oversight. There is something that you should have seen that you never saw. Okay. And that one, the accuracy increases the more you practice. So for some of us who have done it for a long time, We are not saying we never get it wrong. We get it wrong sometimes, but if we compare our win accuracy now, our win rate now to the time we started, we are way ahead. That's the difference. And it's because we have practiced this for 8 solid years. It's never going to be the same. You understand? Yeah, so that is just that. So please go over the videos to understand what we are doing properly. So I said we are going to do something. Let's identify a live market and then we tell the trend of that market and we see how we are going to market and even how we are going to take advantage of it. Okay, I hope that is fine. So this same market, this is the live chart. This same market, this is the live chart. This is the live chart. Okay. So the question that you asked, no, it wasn't even a question. It was a comment. The comment that you made, if you have seen it here, um, I hope that my explanation will clear it. Yes. So before I analyze this, I want you to tell me the trend of this market. What do you think is the trend of this market? Let's say you open your chart and this is the first thing you see on your screen. What is the trend of the market? What is the trend of the market? Technically, what is the trend of the market? Okay, so Blessing is saying it's an uptrend. Thank you. That was confidence. Yes, it is an uptrend. And the reason is simple. The market is going up. That's a literal way of saying it, a layman way of explaining. It is going up. But then a more technical way is that the market is forming a series of higher highs and higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, and then higher. That's what is happening. That is why we say this is what an uptrend. So it started from down here. We have our first high. Then we had this high here. Then we have this obvious one. Then we had this two. And then the last one is here. Now, let's look at it from the bottom. Here, the high was formed, but it never retested, so we missed. The high was formed, it came back to retest it. A perfect retest went up without a drawdown. So this, we would have seen profit without seeing any negatives, right? However, upon this high, market came for a retest and it didn't buy right away. It went down here before it started to go up again. Okay, so the question, what the comment that you made, yes, this is a clear example. Upon the retest, it didn't just buy from there. It went deep down before it changed direction to go up. That's why I said that sometimes it will go against you, but it will eventually go in your direction. It happens. Okay. That's why you will lose some of your trades sometimes. But the reason is simple. It could be respecting another block. It could be respecting the fair value gap. These are stuff that I have not talked about with you. I don't know if you know them already, but maybe that is where the market went to. And it's part of the analysis. We will look at that as well. So we do a lot of analysis using various models, and then we put them together to predict the direction. We don't just use one system. Okay. We use a lot of a system that we've merged together. So when I see the market, I know that if I should enter here, my win probability is this. You understand that? Yeah, so each trade and then my chances of winning it. Each trade has its different chances of winning that trade. And that comes as a result of what? Constant practice. So this one, I know that it will continue to buy, but then we needed to have this here, and then now it will go. So what next are we expecting as traders? If you are already not in this market, you don't enter right now because we say it's an uptrend. No, this is what you are going to do. Wait for it to continue going up. Now, this is the last level you marked, right? So wait for it to break it. Then wait again for it to come back. When it comes back, that's the only time you will take a buy here. And you hope that the market will go up. So you will take a buy right here. A buy. And then you hope it will go up. Technically, that's how you are going to analyze it. And that is what you will do when it gets there. All right, so we have done that for a buy market. Let's look for a sell market. I think we have done a lot for today. We can start calling it a day. All right, so this was obviously a buy market, and you can see that I also had an analysis here suggesting where the price can move to. You see the arrow pointing upwards. So I was expecting it to continue to go up. And as you can see, that's exactly what has happened. Okay. And even this market, we shared our analysis on it on our platform, and a lot of our people got this buy. Okay, so this is a buy. I want a sell market because we have already looked at a buy. I want something that's trending downwards. So this is how you are going to do it. And it is not difficult at all. It is not difficult at all. So this market, it is a downtrend, but I know that not all of us can tell. So let me look for it, an obvious one. I want to see an obvious downtrend. This one is changing direction because it has met a demand zone. I want a clear downtrend. Excellent. So something like this, we can work with it. Let me break it down to a more lower time frame. Okay, so this becomes very obvious. I believe we'll get this one. Okay. So this is clearly a downtrending market, and as you can see, it is descending. So you mark your levels. I started from anywhere. Yeah. So you can see it's respecting it at some point and then just leaving some points also behind and all. So as it stands now, which will be your last? This one here will be the last. Ignore this part. This will be the last level. And so I will wait for market to trade here and then I'll join the sell, right? So I'll do something like this. Then I'll zoom in so you see it well. I'm saying that I'll wait for price to push up here, then I'll join the sell from here. So over here, I'm going to take a sell, right? I'm going to take a sell over there. So that is how I'm going to join a sell in a downtrending market. This is a live chart, not something that has already happened. So we are not just using the past data to come and show you what happened. We are applying the same knowledge to the current market to tell you what is likely to happen. Okay, so this is how we are going to deal with it. So whenever we put setups on the platform with our arrows pointing up or down, this is what it means. Okay, this is what it means. Sometimes we apply order blocks, fair value gaps, stuff that we have not already taught you. So when you see them, you understand the entries and take them. For that one, we will explain them later because it's more advanced way of analyzing the market. So we will end here. I think we've done almost an hour. Yeah, so this is how we are going to analyze the market, and this is how we are going to trade. Okay, so I said I will give you an assignment. Let me just pause this.